In today's episode, we'll discuss strategies for managing your credit card utilization ratios. Your credit card utilization ratio is an important factor in your credit score, and understanding how to effectively manage it can help you maintain healthy credit profile. So let's dive right in. Oh man, so keeping your credit card balance low. I like to say that real smooth and easy toned because people need to ingest that the right way. But in reality, I should be saying keep your credit card balances low. You know what I mean? Aggressively. That's what I should be doing because that's how important it is. It is crucial. One of the most effective strategies for managing your credit card utilization ratio is to keep your credit card balances low. Ideally, aim to use no more than 30% of your available credit. You guys heard the freestyles, you heard the bars, you heard all the things I've put together for you guys to make you guys all understand the same message. Keep your utilization under 30%. So important. Because, for example, if you have a credit limit of $10,000 across all of your credit cards, you want to try to keep that balance below $3,000. Because by keeping your balances low, you demonstrate responsible credit management, basically. And responsible management is pretty much like telling them, it reduces the risk of you appearing like you're overextending yourself to lenders. You don't want it to look like you borrow a lot and then you kind of just live off that and pay it off gradually as you can. You don't want that. You want them to look and understand that you can manage your money. I'll give you another one. Pay your credit card balances in full each month. Listen, you don't pay interest if you pay your credit card balance in full each month. You don't pay any interest. They make no money off you. So imagine being able to use the money that they give you to run your day-to-days. You pay it all back in time and you don't pay them anything, but your credit increases. Your credit history increases. That's what we want to do. So another effective strategy is to pay your credit card balances in full each month. By paying off your balances in full, you avoid incurring any interest charges and you can maintain lower balances consistently. This not only helps keep your credit card utilization rate low, but also saves you money because you're not paying any interest, right? It's really exactly that. Another thing you could do, make multiple payments throughout the month. Let's say you can't pay it all back one shot. If you spend a little bit on the first and you get paid on the 8th, pay that off on the 8th. If you spend some more money on the 13th and you get paid on the 25th, making up a date, pay it off on that date. Whatever you use, either pay it off immediately or at the next payday, if that's how you live it. You understand? Because what that does is gives you an easier way of keeping track. You're not falling behind. Making multiple payments throughout the month can also help manage your credit card utilization ratio effectively. So instead of waiting until the due date to make a single payment, consider making smaller payments more frequently. This helps keep your balances low and payments, and it keeps them from spiking too close to your credit limit too. So just to be sure, make sure you monitor your credit, obviously, but monitor your due dates and make payments on time to avoid any late fees or penalties. Another thing that I see people that don't do and they really should is after it's been 4, 5, 6 months of you making great payments, even I'd say most likely a year, request a credit limit increase. Why not? Your credit is good. Another strategy is to request credit limit increases on your existing credit cards. By increasing your credit limits, you automatically reduce your credit card utilization ratio if you're carrying any, but you won't because you're going to pay it all down. But if you do, that's a good way. However, it's important to use this strategy responsibly. A credit limit increase should not lead to increased spending or tempt you to accumulate more debt. It's not because they give you more money that you have more to spend. That's not the case. They give you more money so that you can utilize it properly, but that doesn't mean you're balling. You're not balling. Save your money. Use your money on your own. You can use your credit card and pay it immediately with your cash. Then you're balling. But if you're just using credit and you're struggling to pay it back, you're not balling at all. You're on the bench. You're not in the game. Don't even think about that. Because the goal is to maintain the same level of spending while reducing your utilization ratio. That make sense? Another one, diversify your credit. Man, you're not balling if you got 4 or 5 credit cards and that's it. That's not how it works. Because having a mix of different types of credit can also positively impact your credit card utilization ratio. So while credit cards play a significant role, you can have an installment loan, you can have a nice car loan, a mortgage, a mortgage, a mortgage. Yeah, because I'm trying to get all my people to stop renting and become owners. I don't like the tenant thing. We don't need to be tenants. we need to be owners. So a mortgage can help you balance your credit profile. Responsible management of different types of credit demonstrates your ability to handle various financial obligations, and it can contribute to a healthier credit profile. Diversify. A credit card, a line of credit. You can even have a car loan if you need to on there for a while, then pay that off. And a mortgage, open your business after that, using all that good credit to help you open your business, and then you start building your business credit. But that's a whole nother episode of the podcast. So we'll talk about that another time. Oh, my bad, I hit the mic. So regularly monitoring your credit card balances and credit limits is crucial for effectively managing your credit card utilization ratio. Keep a close eye on your credit card statements and credit reports to ensure that reported balances are accurate and they reflect your payments and usage properly. Listen, these credit unions, Equifax, Credit Karma, TransUnion, they make mistakes. They're not perfect. Things happen. It's up to you to check them regularly. Check your credit report. Get Borrowwell. Get the Credit Karma app. They're free. They're going to send you notifications every month letting you know the changes on your credit. If you're not using that, I don't even know what you're doing. It's free, and it gives you an insight to your credit. And they email you every month letting you know what's going on. So in reality, like in conclusion, effectively managing your credit card utilization ratio is crucial for maintaining a healthy credit profile. By keeping your credit card balances low, paying in full, making multiple payments, requesting credit limit increases responsibly, and diversifying your credit while monitoring your balances, you can successfully manage your credit card utilization ratio and improve your overall credit worthiness. Credit worthiness. You're only as good as your history when it comes to your credit. Make your payments on time. Keep your utilization low. Stack your money up. Be ready for when that proper investment comes, that business investment comes, so that you can pull the trigger. I want you to be ready. Like I always say, I'm winning. The people around me are winning. I want to see you win too. So if you need to hear from somebody who's lived like you and been through what you've been through, I'm that dude. Listen, that wraps up this episode on strategies for managing credit card utilization ratios. Remember, responsible credit management and keeping your balances low are a key to maintaining a healthy credit profile. And I really want to see, especially in our community, that everyone has a healthy credit profile. You don't need to go to second and third lenders and be paying super high interest rates for loans. Manage your stuff. You don't know what to do? Get at me, www.clarkadet.com. And listen, you know what I always say, I hope you learned something today. If you did, please like, follow, and share. Tell a friend to tell a friend. Let's bring financial literacy to an end. Let's get it, y'all.